If you're looking for some great deals on the stock market right now, you actually don't have to look too hard. With all three major indices down double digits just in the month of May, there are fantastic dividend stock discounts popping up left and right. And in today's video, we're gonna hone in on three of them that look like the best bang for your buck as we head into June. So without further ado, let's get into it. All right, what is going on, my friends? Ryan Williams here, back with another one. And here on this channel, I show you how to take steps towards financial freedom by investing in dividend stocks, which I think is hands down the easiest way to create passive income. Twice a week, I'm coming at you guys with new videos. I upload every Wednesday and every Sunday. And most of these videos are dividend stock analyses, as well as inside looks into my own portfolio. And as far as today goes, we have some really exciting dividend stocks to talk about, all of which are just completely tanking in share price, which is creating a really great opportunity to buy these companies at a steep discount. Starting with the first stock of the day, guys, we have Verizon, ticker symbol VZ, which is one of the biggest telecom companies here in the United States. It's one of the big three, along with AT&T and T-Mobile. Now, year to date, as you guys can see, Verizon is not doing too hot, down 5.72% so far this year. And just in the last month, just in the last 30 days, they're down over 8.5%. Insane drop. After they reported their earnings at the end of April there, Verizon had a huge sell-off, which brought the share price down quite a bit. It looks like from the screenshot, it dropped nearly 10% after earnings, which is totally fine by me because it is making this wonderful company even more affordable to purchase. And while it's declining in share price, the dividend yield is going up. So we're able to get more cash flow for less money invested. Now, Verizon's going to be a really good stock to keep your eye on and consider adding more shares of or adding to your portfolio as we head into the month of June for a couple of reasons. I think it's a great investment. I mean, it's just a really solid company all across the board, and we can see that they're anticipating still continued growth. It's a huge company, but they're still expecting continued growth for the next couple of years. We're seeing some more top line, some more revenue increase on the way. And also, guys, in the current environment we're in with high inflation and fears of a recession and all that jazz, Verizon can be looked at as a sort of defensive stock. I mean, if you think about it, people are so reliant on their technology, including myself. You know, I've got my phone here, I've got my iPad, I've got my laptop right here. So I, along with, pretty much everyone out there these days, am extremely reliant on access to the internet and access to some sort of connection, right? So Verizon is able to offer that. And these days, I think it can be considered almost more like a utility bill that you have to pay. Even in a recession, in a deep recession, people are going to be likely to cut other expenses before they cut their phone bills, which I think makes Verizon a really good investment. Another reason is because the cost of entry to this type of business is extremely high. Starting a telecommunications company like Verizon, like AT&T, like T-Mobile is extremely capital intensive. So it takes a lot of money to get some skin in the game, which means that should keep some more competitors from entering the market, at least not anytime soon. So Verizon is gonna, maintain its position there at the top with T-Mobile and AT&T. Furthermore, like we kind of touched on, as the share price continues to go lower, it's pushing the dividend yield up because the share price and the dividend yield have an inverse relationship. If the share price goes up, the dividend yield comes down. If the share price goes down, the dividend yield comes up. And right now, Verizon's dividend yield is sitting at 5.21%. It's a very high yielding dividend stock. So you're getting some great bang for your buck if you're investing in this company. 5-year growth rate is not very high. That's, one not so great thing about the dividend, but they do have a respectable dividend growth history of 18 consecutive years. And before we move on and get into the next stock, I just want to show you guys my Verizon position real quick, show you what I'm rocking with here. So if we go over to the holdings page right here, scroll down, you guys can see right here that I have nearly 30 shares of Verizon, 29.63, and my position is down quite a bit. I'm down over 10% in Verizon right now. So I'm considering adding more to this position while it's so down so I can lower my average cost per share, but at the same time, it's not my first priority. I have some other stocks that I've been contributing to, like Starbucks, like Lowe's, many of you guys know that, and I might consider throwing some more money into Verizon here soon because it's looking to be at a really great valuation. All right, guys, moving on to the next stock, we have UPS, ticker symbol UPS, the United Parcel Service. And UPS is one of the world's largest shipping companies. They've been around for a long time as well. I believe they were founded in 1907. So they've been around now for over a century, over 100 years. And as of late, UPS has not been doing too hot. You guys can see here that year to date, they're down about 20%. And then just in the last month, in the last 30 days, they're down 10.5%. So seeing some very steep drops right here. And why they're down so much can be explained by this screenshot right here from their recent recent earnings report, they explained that high inflation, a surge in energy prices, COVID lockdowns in Asia, and geopolitical uncertainty were the key factors that led to a decline in the company's package volume growth, especially towards the end of the quarter. But the silver lining is, in the short term, right now, it is pushing the share price down, which is creating a really good opportunity to pick up this awesome company at a steep discount. And right now is a really good entry point. Despite all of the craziness happening going on, guys, scrolling down, it's still a really strong business. And looking at this revenue chart right here, I mean, it's trending upward pretty solidly, right? Additionally, guys, UPS creates a ton of value for their shareholders, not just in terms of the dividend, but share buybacks as well. If we look at this screenshot right here, per their earnings release, the company is set to double share repurchases for 2022, taking the target to $2 billion for the full year. So they are buying back a lot of their shares. And as we get over to the dividend, actually, let's scroll up and go over right now, we can see that it's a very reliable dividend. So they have a forward yield of 3.63%, which will continue to rise, possibly even get into the high 4% range if this company declines in share price anymore. And then they also have a really high 5-year growth rate, a high 5-year CAGR of 9.55%, which is beating inflation. We like to see that. And then they have, like we mentioned, a really respectable dividend growth history, really consistent 22 years of consecutive dividend growth. And if we go over to the dividend history page right here, let's take a look at the slope on the dividend growth. That's, not looking too steep. More recently, it certainly is, but, very steady growth still nonetheless. All right, guys, now the third and final stock of the day, we have Dick's Sporting Goods, ticker symbol DKS, which is America's largest sporting goods retailer. And a lot of people don't know this, but Dick's Sporting Goods isn't just Dick's Sporting Goods. They also own other stores like Sporting Goods, Golf Galaxy, Field & Stream, Public Lands, Going, Gone. And they're also in the midst of developing various performance centers to help the athletes that shop at their stores step up their game and hone their craft, which will help get new people or keep the current existing customers in the Dick's Sporting Goods ecosystem. And as far as their share price performance, guys, this one is taking the biggest hit out of all of the companies we've talked about today. Just so far, year to date, Dick's Sporting Goods is down 32.25%. Unreal. And just in the last month, in the last 30 days, they're down nearly 30%. So a lot of their losses for the year so far have come in the last month. I know they're reporting earnings today on the day the video is released, so that could have done one of two things. Either they reported good earnings and the share price shot up because of it, or not so much and the share price continued to plummet. I'm actually very interested to see what happens. And in regards to why it's down so much so far this year, guys, it's just the same old thing with all of these other companies. It's inflation, it's fears of a recession, stuff like that. And in fact, a lot of retailers specifically have been taking the biggest hits out of many other companies in the markets. I mean, Target last week, many of you guys know, it dropped 25% in one day, and that brought many other retail companies like Dick's Sporting Goods down along with it. And so having said all of this, why is right now a good time to pick up Dick's Sporting Goods? And it's pretty obvious, guys. I mean, just year to date, it's at a 30+% discount. You can buy it for 30% less than you could January 1st. So the valuation is just looking sweet. Right now is looking like a really prime time to buy Dick's Sporting Goods if you're looking to get into this company. And this business is still growing as well. I mean, scrolling down, take a look at that revenue growth right there. Just like what we saw with UPS, they're expecting continued revenue growth as the years go on, even with the high inflation, even with recession fears. And in terms of providing value to shareholders, we can see right here that highlighted part is they repurchased nearly 11 million shares of stock for $1.2 billion. This was in 2021. So this company is providing a lot of value to shareholders in that regard. Also in terms of the dividend, which as you guys can see right here, the yield isn't super high, about 2.5%, very average, but look at that payout ratio, 10%. Okay, this dividend's gonna be around for a while. Only 10% of their earnings, of their income, are going to the dividend. That's awesome. And even with that, they're growing the dividend so quick, a 22.5% 5-year growth rate. That's outstanding. And then they have 8 years of consecutive dividend growth as well, which is, I'm comfortable with that. I'd also be very curious to hear your guys' thoughts on Dick's Sporting Goods. I think it looks like a really great company. I mean, just in terms of the financials, in terms of the valuation for sure. But as a long-term investment, what do you guys think about Dick's Sporting Goods or retailers in general? Do you think retailers are kind of dead? Do you think retailers are still going to be around? Let me know your thoughts in the comments below. All right, guys, now those were the 3 stocks that I think are looking like amazing buys as we make our way into the new month. And now with that behind us, there are a few more that I just briefly want to touch on. We won't go as as in depth. But I just want to show you some other really great stocks that have just plummeted year to date that you might want to consider taking a look at and maybe swooping up some more shares. So right there at the top, we have Scott's Miracle-Gro, which is a stock I've been talking about a little bit more lately. So far, year to date, they're down over 43%. So this stock is at a near 50% discount just in the first handful of months this year. Next, we have VF Corporation, VFC, which is down 40%. This is a dividend king. Really nice company. They own brands like Dickies, Vans, North Face, tons of great apparel brands under VFC. Also, T. Rowe Price, which has been down for some time, but year to date, they're down about 40%. We have Stanley Black & Decker, which is also a dividend king right there, ticker symbol SWK, which is down 40%. BlackRock, Johnson Outdoors Inc., Cisco down 35%, Target down nearly 34% year to date, Williams-Sonoma. That stock was cheap already, but man, down 33.5% year to date. PPG, Dover Corporation, which I think is a dividend king, Best Buy, Lowe's, Whirlpool. Look at all of these companies, guys. Charles Schwab, JP Morgan, Franklin Resources. I seriously could stand here all day and look at these stocks that are down in share price. Bank of America. Oh my goodness. Walgreens Boots Alliance, Medifast. It's like Christmas for us dividend investors. And if you want to see all of my monthly dividend stock picks so far this year, then check out this video playlist right over here. Many of the stocks I cover in these videos right here are more discounted today than when I was talking about them in these videos. So you might just find your next dividend stock investment, click right here. I'll see you guys in the next one.